Hey VB Nation, all of YouTube, what's going on? My name is Patrick France, Senior Instructor here at VectorVest, back with you once again, and today we're going to be taking a look at one of the most talked about stocks on social media. It is an extremely speculative play, so we're going to look at it, talk about it, discuss what's driving this run, and so that way you can make the decision on whether or not this trade is right for you. So if you're ready to find out what that stock is and figure out if it's good or not for you, make sure, as always, smash that like button, subscribe if you're not already subscribed, and let's jump right into it here today. All right, welcome back. So I wanted to start off by introducing you guys to a free tool, apewisdom.io. It conglomerates all the data out there from Reddit over the last 24 hours to show you the most talked about stocks out there. So if you've been following along with these stocks, well, this should come as no surprise, but Bed Bath Beyond has actually been on a tear to the upside, and we'll talk about why in just a few moments. Followed closely by a second, GameStop, which if you followed any of my videos from the past, know that I'm a big GameStop fan. So we're going to be discussing, is Bed Bath Beyond the new GameStop here? So let's go ahead, take a look at why everybody's starting to get so excited. Now, if you're familiar with these kind of stocks or familiar with Wall Street bet stocks or Reddit stocks, you'll know a lot of them have to do with short interest and looking for a short squeeze. Well, if we go take a look at Yahoo Finance for Bed Bath & Beyond, we see the short percent of the float is over 100%. Now, if you recall from back in January of 2021, GameStop had a short interest of over 100% as well. So it's setting up to be a very familiar situation to what we saw back then. Well, if there's more stocks out there than actually exist, then if shorts have to cover, well, that's going to increase the price and make the price of the stock continue to climb higher. Now, just because the stock has a short interest or a high short interest doesn't mean it's going to shoot up. So what is driving this current run in Bed Bath & Beyond? Well, let's talk about a little bit of the information behind that. One, you have Ryan Cohen, the same guy who's on the board of GameStop, now on the board of Bed Bath & Beyond. And also, it's very similar to GameStop back when he entered into the board member position back in 2021. Whereas they both had failing sales, their revenue has been going down, and the stock has been in some trouble. So just like when he entered into GameStop back in 2021, he came with a transformation plan and started putting that into place. He's also started doing the same situation or same thing to Bed Bath & Beyond. Now, if you've been following it, you should know Bed Bath & Beyond as the typical retail store has not been doing so well. But the ace up the sleeve comes from the Bye Bye Baby aspect of things. That branch of Bed Bath & Beyond in itself does over $1 billion in sales on a regular basis. So therefore, Bye Bye Baby itself is worth more than what the stock is trading at. So that gives the option for them to either do a spin-off where, people who hold shares of Bed Bath & Beyond will get new shares of Bye Bye Baby, and that will be its own separate company, but under the umbrella of Bed Bath & Beyond. And that would increase the revenue, increase the cash flow they have at Bed Bath & Beyond, therefore helping improve the fundamentals of the company and also driving that stock price higher up over time. Well, that's one option. They could also just sell Bye Bye Baby, collect billions of dollars, $1 billion to possibly more actually, for that aspect of the company. And then they have that extra cash on hand to be able to get the company back on the right footing. So they have a lot of different options just by using the Bye Bye Baby aspect of the company in itself. One other thing they've been also mentioning is they could potentially look for private equity, trying to take potential private loans that could help boost their cash flow or slow down their cash burn that they're currently experiencing here. So then I found another article talking about it here today. Comes from Yahoo Finance once again, or simply Wall Street. And it talks about the short squeeze may be risky, but the new business model has a chance. So just really going to take a look at some of the key highlights of the summaries here, and then we'll dive into the VectorVest 7 software. So from the summary, what they talk about is experienced traders have an advantage when maneuvering possible short squeezes. They can also work for retail investors that have a plan. And this is something that VectorVest talks about day in and day out. We always state, plan your trade and trade your plan. Bulls make money, bears make money, and pigs get slaughtered. Always remember that. The next thing they talk about is Bed Bath Beyond changing the business strategy in 2019, where they importing off-label products and selling them as their brand. Inflation is boosting this approach. So basically taking cheaper versions of what they currently sell so that way they can have a higher margin. And then also one of the other key aspects is insiders have been buying Bed Bath & Beyond stock, showing confidence in the company, and that's exactly what you want to see. They have confidence that they have a plan in place that'll turn the company around, improve the fundamentals, so therefore they're taking a bigger stake, showing their conviction behind it. And that's exactly what you want to see if you own any sort of stock. Having the CEOs or the top board members of that company owning shares in that company is definitely a positive sign, especially when you're seeing them buy more as well. So once again, very similar situation to what we saw with GameStop back in 2020 coming into 2021, but under a new company with Bed Bath & Beyond with a lot of potential plans that could help boost the stock price and help boost the fundamentals of the company and get the company back on track. Also, as a side note, they just fired their CEO, so that just makes one more similarity between the Bed Bath & Beyond and the GameStop saga. So now with that, let's go ahead and jump into the VectorVest 7 software. So if we close out of here, there we go. So right now I have both GameStop and Bed Bath & Beyond. And looking at them, as always, just going over the basic information if you're not familiar with the VectorVest 7 software. You get the basic data such as the company's name, the symbol, the exchange, the price, dollar change, percent price change, basically the stuff you can find pretty much anywhere. And then you get to the value. Now, the value is what we currently feel the stock is worth based on the current fundamentals. And as you can see, both of these stocks are overvalued, and you'll see why here in a second. The next indicators that we're going to look at are all going to be cast on a scale of 0 to 2 to make it easy for you guys out there. Above 1 is good and below 1 is bad. Well, both of these companies have a relative value, which shows the long-term potential of the stock well below 1, closer to that 0 range, indicating poor long-term potential. The next indicator is the RS, or risk factor, if you will, and that indicates how much risk is involved in the stock. And as you can see, since they're both below 1, that indicates both of these stocks have more risk associated with it than the average stock out there. So when you combine the RV and RS indicators together, and they're both below that level of 1, that indicates a speculative stock. Well, a speculative stock is good for a speculative trader. What does that mean? So somebody who's a day trader, short-term swing trader, momentum trader, somebody who uses charts to time their entries and exits. Once again, as we stated earlier, plan your trade and trade your plan. So both of these stocks are speculative. And then, as I mentioned a second ago, a momentum trader. Well, look at the RTs. The RT is looking at the short-term price trend of the stock, and both of these stocks have extremely high relative timings, or RTs. Since they're cast on a scale of 0 to 2, they're closer to that 2 maximum range. So therefore, it tells us they're in a really strong uptrend right now. So these speculative stocks with really strong momentum behind them are once again great for speculative traders out there. So if this is your cup of tea, if you're somebody who likes the thrill of being in and out very quickly and seeing quick gains, these are definitely going to be the stocks for you. If you're somebody who's more of that dividend collector, long-term buy and hold, where you just buy in, hold it for a few years, watch it consistently improve because the company is making money, well, these are probably going to be stocks that you're not going to get into. Just being honest about the situation. If you're not comfortable with the big swings higher and lower, then most likely you'll probably look for something else other than these. Well, let me know which one you guys are down in the comments below as well. Are these your cup of tea? If not, let me know what kind of stocks you prefer looking at. So let's go ahead and dive right into the graph, since both of these stocks are up significantly here today. GameStop's up at the current time of recording this, up 11, almost 11.75%. Bed Bath & Beyond up 38% so far today, after that 30+% gain it had on Friday. So let's go ahead, take a look at the graph of these and see what the charts are telling us here. So we'll click on the graph all button at the top. And just like that, we got a graph of GameStop coming in first. So before we jump into what the charts are telling us, let's go over what we see here to make sure everybody has a clear understanding of this. Well, so what we see is the price shown in candlesticks, and then we have a 50 and 200 day moving average, simple moving average, because that is more of a longer term look on a stock, or considered more of a longer term look on a stock. And then below there, we have the MACD, and then below that, the volume. And as we always talk about, volume shows conviction. So therefore, whenever looking at a chart, look at the volume at the bottom. So that way you can see days that you want to pay attention to. Because if you see a strong volume day, that indicates a big shift in the stock's direction, or that tells you to focus on that candle, because what that candle is telling you is usually a good insight onto what to expect next. All right, so looking at GameStop, as we can see, here was the split date back on the 22nd of July via the dividend. And since that point, it pulled back a little bit right after that, and then has now started climbing higher, breaking above that 200-day moving average and continuing to come back to the last 6-month high. So the 6-month high comes in here at $49.85 after the split adjusted price. And as we can see today, we got to $47.99. So getting pretty close to taking out this 6-month high here. But as a longer term investment idea, this is something to keep an eye on with the 50 and 200 day, because the 50 day is getting ready to cross above that 200 day, which is what they call a golden cross. And that is an extremely bullish sign, and it indicates a new long-term uptrend starting to form on the stock. So from a long-term perspective, that's definitely a great sign to see, especially if you've been buying and holding GameStop ever since the whole January 2021 fiasco. So then, as we can see right now, there is a taller upper wick on top of today's candle at the time of recording this. This could all change by the end of the day, but it's definitely something to keep an eye on. You want to typically see the price close in the upper 50% of the range for the day. That indicates that the bulls are still in control and the stock has more room to run. It's not a guarantee, but puts the probabilities in your favor, and having the probabilities on your side is definitely the best way of handling that kind of a situation. But looking at it here, pulling back off of that high that it hit right at the very beginning of the day, but still holding in strong, and looking at the volume, you can see a lot of new interest or a lot of conviction behind today's move. Now, looking at the MACD, I like looking at the MACD because it indicates both short-term and longer-term trends. What I mean by that is if the MACD line, or this blue line, is greater than the white line or the signal line, then that tells us on a short-term basis, you have an uptrend. On a longer-term basis, when you look at both of those lines and they're above that level of 0, that neutral territory, that indicates a longer-term uptrend is forming on the stock. Well, we had that back around the beginning of June, and since that point, GME has been going up nicely. So I like what we're looking at. Currently, we have a strong support level. I'll just use the horizontal cursor. We have a pretty strong support level down here, right around 38 to 40 in that range. As long as we can stay above that, things are looking pretty good. And now one key tip I will point out is if you're trading stocks that have a big gap up, like we've seen with GameStop, and we'll see here just in a second with Bed Bath Beyond, a little tip or a little trick that I personally like to use for setting stops is at the low of the gap up day. If it breaks down below that low, then probability tells us that it'll fade that gap, and you don't want to sit through that fade, wait for it to hit that point, and then look at a new entry. But as long as it stays above that low of the gap up day, then that tells us the stock is continuing to move higher or moving sideways. Either one is fine as long as it's moving in the right direction. Now let's go ahead, take a look at Bed Bath Beyond. So Bed Bath Beyond, still below that 50 and 200 day moving average. You have a longer term decline here in the price action. And then looking at the MACD, however, you have a bullish divergence forming and then leading up to today's big pop that we've seen. What I mean by that, and I'll use the freehand line, is price was steadily moving lower at this point, but the MACD was steadily moving higher, indicating that that short-term momentum was dissipating and upside potential outweighs downside risk at this point. It's a very technical pattern, but anytime I can spot bullish or bearish divergences, I like trading those because I found a high success rate with them. So we can see that. I'll move these off the chart once again. And then looking at it here, we can see the volume started increasing right before the beginning of August, and then coming into the big up day on Friday, then the gap up here as of today. Now, as you can see, it has pulled back significantly off of that high that it hit right at the very beginning of trading this morning, which is definitely a worrisome sign from a longer term perspective or a swing trade perspective. Now, remember, I'm talking about speculative trades. So when I say longer term, I'm talking about, holding for a couple of days, a couple of weeks, etc. But the same kind of approach we talked about with the gap up with GameStop can be applied to Bed Bath & Beyond. So if you're looking at jumping on board, taking advantage of these as a swing trade, in case you missed out on the 2021 craziness and you want to jump on board now and try to make another run here or jump on board with a potential run, well, the way you could play this is by using a line in the sand right at the low of the gap up. So the gap up comes in, the low price for the day, 1075. So put your line in the sand at 1075. And if it stays above that point, that tells us the stock is making us money. And if it falls below that point, that tells us probability tells us on that one that it'll most likely fade that gap, coming back down to the high of Friday's close. So therefore, right now, it's staying above that point. The day is not over. We could see new buying activity coming in, pushing it back to the upper 50% of today's trading range, which would definitely be a bullish indication that it has more room to climb. But once again, you have a plan in place that if it breaks down below the low of today's trading activity, then that would be your sell signal, or telling you to, if you've been into this earlier, take your profits, wait for a better buying opportunity to jump on board. So with that, I hope you guys enjoyed today's analysis. I hope this has shed some light or helped clarify some things to help you guys make a more informed decision. If these stocks are for you, once again, let me know down in the comments below. And if they're not, I also want to hear your opinions or thoughts on these as well. So as always, it's been my pleasure hanging out with you guys today. So until next time, take care, adios, and toodles. Yeah.